AP, welcome home. Thanks for the time today.
Yeah, great.
As always.
Yeah, great to be with you.
Adam Parker. Right. We, of course, are counting down to Netflix earnings after the bell. Joining us now with what to watch is big technology founder Alex Kantrowitz and Netflix shareholder Jason Snipe, both our CNBC contributors. Afternoon, gentlemen. Good to see you both.
Good to see you.
Alex, let me begin with you. Is margin the big story here, or are you looking at things like churn or just overall engagement going into the quarter?
Yeah, margin is definitely going to be important. We're expecting big profit increases from Netflix after they raised prices. We saw that in Q1. We expect to see that in Q2. I think the big risk here is that Netflix has run up into this earnings report. They're up 43.5% on the year. They're one of the best performers on the S&P 500. So that could place some undue pressure on the stock. If they miss or they don't beat enough, we could see a drawdown ultimately. But I think they're in really good position. That price hike, the fact that tariffs, the talk has gone away for the most part. So they should be very in great shape with their subscribers. And then, of course, this is going to be the Squid Game quarter, and I think that matters a lot. So I'm expecting big things from Netflix this quarter.
Yeah, Jason, that's going to help in a usually Q2 seasonally is maybe one of the more challenged quarters, isn't it?
No, for sure, absolutely. And I think to Alex's point, the concern, for me is a run up into the print. Obviously, the stock's up close to 43% year to date. But hey, we're expecting 16% growth on revenue, close to $11 billion. We're expecting about $7 worth of earnings, which would be 45% year-over-year growth. So there's a lot here. And then the margins expansion of above 30%. Ad-supported tier has continued to work. The live content slate has been really strong. And I think the content for the back end of this year will be strong. So I think there's a lot going well for the stock, and I expect a lot of the same going forward.
Alex, we have had, it's not apples to apples, but we've had some downgrades lately of some consumer names. Today it was Shake Shack and Starbucks. We've had some maybe less than stellar credit card data on the lower cohort. Would it surprise you to see a little bit more churn, especially for those who rely on the ad tier?
I would be surprised to see churn. And if there's any sign of slowness for Netflix over this past quarter, it might be that they drop Squid Game on June 27th. If you're really scrambling to make your quarter numbers, do you hold an asset like that and say, all right, we're going to do great, so let's push it into Q3? Or do you say we're going to get this out in the last few days of the quarter and make sure we hit those numbers? I mean, the bump that they're going to get from Squid Game, and I know I keep talking about this, but I expect it to be large. The stats are that they got 60 million viewers in the first 3 days. It was #1 in over 90 countries for Netflix. So this is a global phenomenon. If you have to, reach into your pocket to pull out an ace, this is the ace. So if we're seeing any softness, I don't expect it to come this quarter. Maybe it trickles out next quarter, but I think Netflix knows what it's doing here, and it's going to perform very well this quarter.
Yeah, we had a good discussion with Kramer this morning, just what a remarkable example Squid Game is in sourcing something from a low-cost environment and then advertising it all around the world. As you said, it is a phenomenon. Jason, there were some questions today about their buyback activity. They bought back a ton in Q1, almost half of 2024 levels, and some wonder whether that really is the best use of capital at this point.
No, there's no doubt about it. I think that's definitely a concern going forward. I mean, we're talking about $18 billion of spend in CapEx for content. And what else are they doing with the rest of the cash? Will they look to do some buybacks? So with the rest of the year, I think that is a concern. But as I look forward and look at the content set and even looking at live sports, this play at UFC is going to be really interesting. Clearly, they're likely going to lose this race in Formula One to Apple. But I'm really interested in kind of the live sport content. WWE has worked well. So I think that's going to be the interest for me going forward as I kind of look at the quarters coming.
Yeah, it's a great point. And just in general, Alex, the live element, for years it was sort of limited by at least the perception that the technology, could or could it not handle a live event at scale without failing. I think that question's kind of been answered over time, hasn't it?
Absolutely. They did a great job with the NFL. Now, the Paul Tyson fight might have had some hiccups, but they did a great job with the NFL over Christmas, and it doesn't get bigger than that. And I think they need this live element because if you think about what's happening right now, streaming last year or over the past year is up 6%, but Netflix's share is flat. Where are the gains going? It's places like YouTube. It's the free streaming sites. So they're going to need to pull out something big to continue winning share from TV. And what is it? It's going to be live events. So it's good that they've gotten this going over the past year or so. And I expect their investment will only get bigger on live because of the potential payoff.
Yeah. Jason, if they are looking over their shoulder to see if anyone's closing the space behind them, who do you think it is?
Well, obviously on long video, it's Amazon, right? Amazon's a big story, and I think YouTube is a story as well that we don't talk as much as about. But clearly, they have been the streaming winner, and I think it's just about, for me, execution going forward to continue to be the poll runner winner here. So I think that's what it's all about, and they have executed very well going, over the past few years as they've moved away from reporting on new subs, which I think has been a big deal, and their real focus on profitability. So I continue to like the story here.
Yeah, they have a habit, Alex, it's interesting, of sort of being able to tune out things that either aren't going to pay off in the long term. I remember a couple of years ago where we all wondered whether the film exhibitor business was going to distract them from the core mission, and they kind of curtailed it.
That's right. The eye is on the prize at Netflix, and I think Jason brought up YouTube, and I think that's really the thing to watch. We're seeing an obsession with YouTube in this country and all over the world, to the point where people are now saying, hey, that user-generated video site is now threatening a big streamer like Netflix. I think that's something to take with extreme seriousness. And I'm curious, you talk about distractions. I'm curious, is there a move on the product side of Netflix to try to head that off? Maybe they try to bring in big podcasts or something more YouTube-y. We've seen Amazon try their hand with Mr. Beast, and maybe Netflix is going to do something on that front. And I don't think that would be a distraction. I think that would be an important move. So I'm looking there.